All right, so I think it's a good time to start. It's a good time for us to start because I don't want to spend a lot of time. Those who are not here, I think they will join us later. They will join us later. So, as usual, especially those of us that are in the meeting, if you can hear me, show me with a thumbs up. Show me with the thumbs up. Let me know you are following. Let me know that you can hear me well. Good. So this will be a very interactive session. My goal is to help us understand how order flow works, and just defining order flow, it is just how you follow the market movements to understand where the market is going to next and where it is coming from. So before you place any order, you are able to follow the market and understand where the market is currently. Now, part of order flow is doing what we call the top-down analysis, but because I want to keep this as simple as possible, I'll just do let's say 5 minutes time frame, because 5 minutes time frame is okay, and we will follow the orders as they have been moving, and then we will be able to understand where we expect the next movement to go to. So let me just delete everything here like this. So I want to assume I want to assume two things. One, that we are able to do top-down analysis. That's number one. And even if you are not able to do top-down analysis, I want to assume that you can be able to look at a chart and understand whether the market is raging or the market is in an uptrend or a downtrend. And I'm sure all of us, if not most of us, are able to do that. Now, this is the 5 minutes time frame. So we will first do the basic things before we go to order flow. You will mark this break of market structure here. Now, without doing anything else, that tells you something, that in the 5 minutes time frame, the market is bullish. We are roaring up. It is an uptrend. Now, for you to understand where this market is coming to, so that we continue pushing upwards, I want you to look at something, because a lot of people mark order blocks like this. That is one. Someone else will mark this as that. Someone else will mark this one like this. Someone else will mark probably this one. Yeah, something like that. That is how people mark order blocks. Now if you look at all these order blocks, you realize that when the market got here, it reacted from that order block. Like this one, it bought like 16 pips from this order block. But I want you to see that if you marked this BOS, every where you put maybe your order, let's say it's here, let's say this where you put your order, and then you target that high. So all these people are targeting the highs because they've already understood that we are in an uptrend. We are in an uptrend. Okay, now what the market does is it triggers your order, and then it buys a bit, or it just want to show you that you might be moving in the wrong direction, I mean in the right direction, sorry, but then it comes back and takes you out. And this happens all the time, whether you are a pro trader or you are a beginner or you are an intermediate. So how do you understand where this market is coming to? How do you understand, or how do you establish that this market is coming somewhere? So we use something we call order flow. So this is technical analysis. It works most of the times, but other times it fails. But there is no strategy that is 100% win rate. This is not really a strategy. It is part of this SMC strategy that I teach. So I want you to look at this. The market broke this structure here, or took liquidity here. The market took this previous low here and broke structure here. The market broke structure here. There was a BOS. Now I want you to look at something. This low that caused the break of market structure did not take any significant low. Or let me mark this because this one will be important. There is that liquidity that was swept there. Can you see this? There was that liquidity that was swept there. The market came, engineered this low here, it took it out, then broke structure. So actually that is very important. So that tells you that using order flow, this is a strong low, because if a low, okay, oh god, if a low sweeps liquidity and breaks structure, that becomes what? A strong low. SL, a strong low. But now I want you to look at this. This is the 5 minutes time frame. What is our trading range? Our trading range is from this low to this high. Okay, how do you determine a trading range? After every break of market structure, the market creates a new trading range. So we have a trading range here from this low to this high, this low to this high. But we have seen that we have one strong low here, because this strong low took out the previous high. But I want you to look at something. If you come and let's say say that now this is that's my order block, or that is my order block, because of course this retested this. I'm coming back to that. Now what makes an order block to be valid? One is that it must sweep liquidity. 2, it must cause a break of market structure. And 3, it must have FVG. Now, when you look at this, you cannot see any FVG here. You cannot see any FVG here. Number 2, you cannot see any, okay, it swept liquidity here. It swept this liquidity, that low, swept that low, and it broke structure. But now, if you come down here, can you see this? We have this FVG here. We have that FVG here. Now, in the lower time frame, never take an order block that is above FVG in the lower time frame, because there's 5 minutes. This FVG, I believe when you go to 15 minutes, no, 15 minutes you cannot see it. I can only be able to see it in 5 minutes and yeah, 5 minutes. 5 minutes. So we have this order block here, but below the order block we have FVG. Now you also need to understand that this FVG here is still part of our trading range. It is still part of our trading range. Now this is how you use order flow to understand where to wait for this market. Now, of course, we have to wait for this market below the FVG. Below the FVG. If you look at this one, we had an order block here. I don't know whether you are able to see it. We had this order block, this last sell before a significant buy. But this order block was retested by this order block here. Can you see that? So that means money left this order block and it is now on this order block. That is what we call order flow. Order flow. Now, of all the order blocks we have here, this is the only order block that has not been retested. This order block here has not been retested. And we see that this order block swept liquidity, it has FVG, and it also broke structure here. Can you look at this? It did what? It broke structure here. We have an internal BOS there. Let me remove it so that you have a clean chart. That means if I am looking for any serious buy opportunity, I must look at it from here. So everyone who took this buy from anywhere here below this, they will be taken out. They will be taken out. But I will show you how you can use this to do scalping. It's part of the class. It is part of the class that we will do. Someone is asking which time frame. This is 5 minutes. 5 minutes. But with order flow, you can use any time frame. You can use any time frame. Now, what does that tell me? Now, remember that if the market goes below this, if the market goes below this, which we do not expect, it means that we've now changed character and we are now on a downtrend. Remember that this is the 5 minutes time frame. So you don't have to trade with 1 hour, all those, especially because of something we call what? We call stop loss. Now, I also want you to look at something that every time the market breaks structure, it tends to come down and take out all the previous liquidity. And I told you that liquidity are swing lows and swing highs. So all these are liquidity. So you expect that all this will be taken out before the market moves up. I want you to show you something else. If you look at just 1 second. If you look at this one where we have the strong the internet strong low, let me just remove it. You have what we call relative equal lows. You see this and this? These are just relative equal lows. And the relative equal lows in the market means liquidity. So this gives us confluence that the market should, it's not a must because of course we are not the market makers, but using order flow, the market should come at this area here before continuing upwards. And now this is another way that you can use order flow. Let me remove this so that we have a clean chart. So this is the FVG, and this is what? My video is lagging. Okay, let me see what is happening. Let me see whether I'll change. Okay. You will tell me what is happening. But I hope you can now see what is happening here. So in this order block here, we have FVG, it swept liquidity and it took out the previous high. That tells me that I can put, now there are two ways to be in this trade. One is to do what we call aggressive entry. Aggressive entry is like the one we did today on TikTok in the morning. Those who were there in the morning, we traded gold today and we got over 400 pips. So that is what we call aggressive entry. So you put your order limits here, stop loss just below this, and then you target the previous high. And that is like 60 pips. And that is 1:7. Another thing is to wait for the market to come to your order block. But now remember, this is the 5 minutes time frame. So the market can just tap and then move very fast. Okay? But you can also use you can wait for the market to come to your order block, then go to 1 minute. You will go to 1 minute and wait for what? For change of character. You wait for change of character. Now let's assume, although it's not good at all, it's not good to trade against the trade, because the moment you know that the market is bullish, you should only be looking at buying opportunities. But let's assume you want to be part of this sale, the sale that is happening. This is how you use order flow. This is how you use order flow. So the market was going up. When it got here, it did not, when it created this higher low, it was not able to create a higher high. Instead, it created this lower high, lower low, okay, lower high, lower low, lower high. So this is where I want us to start. And the reason I want us to start here, okay, let me delete this. The reason I want us to start here is because this high swept this liquidity. Can you see that? And it broke structure here. So what does that tell you? That tells you that this is a strong high. That's a strong high. If you have a question, please write on the chat so that I'll be able to know. I hope now the video is not lagging. I hope the video is not lagging now. So let's say you were not here when this was happening, so you just got into the market and you want to be part of this sale that is happening, or this retest that is happening now. Okay, thank you, Kevin. Now this is our strong high, so we don't expect the market, this high, to be taken out unless the market now comes to our order block here. So what do? You start following something we call order flow. Order flow. Now you see we had an order block here and we had a supply zone, or a supply area here. Okay, that was our supply area. This one, this red candle here. I hope you can see it. Let me remove this. This one, this is a supply area, and we also have another block here. You can go to the lower time frame. Let's see. Now when you go to 3 minutes, you will see this order block here. Okay, that is the 3 minute. Now this order block now has the money, but it was retested by this order block here. So that means this becomes our strong high. I want you to see how these things happen. So you move this from there. My voice keeps getting lost. Let me try to use a monitor. Just a second, let me do something here. Okay. All right. I don't know why I can't hear myself. Can you hear me? Someone tell me whether my voice is clear, because I don't understand why my voice is okay. Yeah, looks like voices. That's good. Now, thank you, TikTok people. Now look at this. This was the order block. I just moved to 3 minutes so that we can clearly see this, because it's not clear in the 5 minutes. So this was the order block that was retested by this order block. So this order money left from this order block and came to this order block. So if I was to look for a retest, if I wanted to re-enter this market, I could have re-entered it in this order block here, and I am not supposed to be taken out. Why? Because this has now become my strong high. This one has become my strong high. So this is the order block I will use to re-enter this market. Now look at this. This order block was retested by this order block, and if you look at this, it was not taken out. If you look at that, can you see that it was not taken out? Because now this is our strong high. That is our strong high. So what does that mean? Money is now not in this order block. It is now on this order block. This is the order block now that has all the money. Now I want you to see something. I want you to see, now remember, we are waiting for this market to come here so that we continue buying. Now there is something we call inducement. Inducement are what we call the early buyers or the early sellers. Early buyers or the early sellers. Once you understand that this market must come here, you can now confidently wait for because there are two things that can happen. Now, once the market breaks structure, like here, can you see there's a break of market structure here? Let me go back to 5 minutes so that we understand this. You see, there was a break of market structure here. Okay? Now, once you go to the lower time frame, because now it's 5 minutes, maybe we go to 1 minute, the market must come back and take out all this liquidity before it continues going down. I hope you understood that. Now, if your time frame, the time frame you are using to trade is 5 minutes, for example, this is just an example. It is 5 minutes. And then the market has broken structure. When you go to the lower time frame, you will see these swing highs. You see, all these swing highs are liquidity. And the market will come back, take out all of them before continuing going down. So this is how you trade a retest. This is how you trade a retest. So what do we call this? Sell order block. That's how you trade a retest. So you expect that the market should come before it breaks structure further. And if you look at what is happening here, the market didn't break structure. What it did was take liquidity. It took this liquidity and it's now continuing to go up. Now, this one is only valid if this market does not come to our order block. Remember, this order block, we expect that it is the one that will take out the previous or the buy side liquidity. Those who followed me today on TikTok, I showed you how we traded this on gold and it hit our TP. We actually traded in the 5 minutes time frame. We got close to 400 pips. Now, if the market decides to come here before coming here, your order block here will be invalidated, because that means that Liz, are you live? No, I'm not live on YouTube, but I will upload this on YouTube also. I'll upload this on YouTube. So look at this, if the market decides to come here, which it rarely does, but rarely, if it decides to come here before coming here, this will be invalidated. This will be invalidated because we expect that when the market comes here, all this will be used as liquidity, and we will now target the buy side liquidity. We will now target the buy side liquidity. Buy side liquidity. Now, we have a plan here. We have a plan. So let me remove this so that we have a clear chart. We have a clear chart. And by the way, this is the exact thing I did on Bitcoin. I don't know whether I removed it. Yeah, I think I removed it. I waited for Bitcoin here and I got this very good move. I used order flow, I think it was in 15 minutes. Yes, and I waited for Bitcoin here and I got a very what do you call it, a very sniper entry here for a sell. Very sniper, because the market broke this structure. It had to go back up and clear every trade line liquidity, you see. But that is not where we are. Let me go back to GU. Now look at this, Look at this. If you look at this, the market is still building up liquidity. You see, this is the market building up liquidity. That's the market building up liquidity. So we need to come and vet the order block that we are waiting the market to come to. And how do you vet an order block? How do you vet an order block? It has FVG, it broke structure, and this order block is from the order flow. It is from this order flow here. It is from this order flow here. So we expect the market to come, tap to our maybe you can do a 5 pip stop loss, because the market can decide to take out this with a wick and then continue. So the market comes, taps to our order block here, and then we expect it at the start of the FVG. That is the most ideal place to put to your stop loss. I mean to your take profit, sorry, not stop loss, right? Your take profit, where we have the start of our FVG, or even that swing low. You see this swing low? That is the most ideal place to do your what do we call it now? The most ideal place to put your take profit. Now, if you want, by the way, even if you do the stop loss at 3.3 pip, you will not be taken out. But market, remember that market is reactive. It is not predictive. So what you do, you just give the market some room to breathe. I learned this the hard way. So, and you have a very good trade, a 1:6. What did you use? You used order flow. But remember, it is not professional to trade one against the trade. We already know that the market is buying. So taking this trade is risky. It is risky, but using order flow, you rarely be taken out. So you will use order flow, wait for this market to come here, taps, comes back here, and then you continue to buy. But if this market comes here before coming here, your order will be invalidated. Because now it is not using order flow. So order flow is just following the market, the footstep of the market, to know where to put your trade. So that is what we call order flow. So it's time for questions, for clarity and all that. Before tomorrow we look at something else that is very important. But for now, do we have any questions? So Kevin is asking, how do you draw an order flow? Now, order flow really is not that you draw an order flow. What you do is that you follow the footsteps of the market. Let me use another pair here. For example, let me use I want a pair that is a bit raging. All right, here I am coming to you. Now look at this. I want to show you. Now this market is a bit raging. It is a bit raging, if you can look at this. But I want to show you how I expect that this market will still come here. You see, I have an order limit here and I have an order limit here. So Okay, I don't know which time frame we'll use. I don't know which time frame. Okay, let me do 15 minutes. This market is raging a bit, so we'll not be able to see what is happening. Let me also remove this. Good. Now I want you to look at this. I will answer the order flow question and the strong low question. Strong low and strong high. How do you know that the high is strong or weak? Yeah, I'll answer those two questions with this one. Now this is what we call, let me remove everything. Let me just remove everything. This is GBP card. GBP card. GBP card. Now I want us to follow this market. Okay, I want us to follow this market. GBP card is raging a lot, so allow me to start with 1 hour, but we'll come back to 5 and 15 minutes. Now I want us to follow this market and understand what is happening and where this market is coming or where this market is going. Now if you look at this, there was a break of market structure. Now Hillary, look at this here. The market did what? Took liquidity. That was liquidity that was taken. So what does that tell you? Every time the market takes liquidity, it has no business coming back here. So this becomes our strong low. This becomes our weak high. Okay? So for you to understand whether the high or the low is weak or strong, first look at where the market took out liquidity and continued to break the structure. Okay, can you use a light pointer? It's dark. Oh, it's dark. Okay, all right, let me see what we can do. Well, I can use this one so people can see this, but now we need this one because of okay, let me continue. So okay, what's happening here? Where are we now? GBP card. Yeah, so here dark. Sawa. Sam. Now look at this. So the market broke structure and it took out this liquidity. So what does that tell you? That tells you that this high will be taken out. This is the weak high because the market is bullish. But now I want to show you where now the trick comes. Now, okay, this is liquidity. So you will mark that as no, okay. Let's say this is where we are. So the market is coming down. We need to know until what point will the market come down. Now you see all these swing lows. All these are liquidity. But you will need to come and use order flow to understand where is the market currently and where do we expect the market to come down to. Let me delete this so that we have a very clean chart. So I hope here you've understood. Once the market takes liquidity and breaks structure, the low that took out liquidity becomes the strong low. The high that was created becomes the weak high. So let's try to see whether we'll be able to use order flow and understand where this market is coming back to. Now, it is also good for you to study the behavior of any market. For you to study the behavior of any market. If you look at this market right now, you realize that the market is rarely leaving fair value gaps. So every time the market leaves a fair value gap, it will come back and fill it. Every time it leaves FVG, it will come back and fill it. So what does that tell you? That tells you, though we have some few strong lows here, like this one, because this one took out that liquidity and broke that structure. But the issue is, you don't take a trade from another block that has liquidity below it. Now, let us look at which order block, or let us look at where we have the QML. I don't want to confuse you with QML and all those things. Do you see this one? Do you see this low here? Can you see that low there? If you can see it, please let me know. This low. Good. Now, this low created what we call a Quasimodo level. Now, those of you that have been following my class, I'm sure you already know what a Quasimodo level is. It is a level where we have the stop hand. So this was the last liquidity that was taken out. So we need to know, if we don't have any order block that mitigated this QM, then the market must come to it. It must come to it before moving upwards. So let us go back to okay, and from where I sit, we do not have any, because this is a continuation, we do not have any order block that mitigated our QM level. Now what you do is for you to check what is around your QM. Now there is like a small FVG here, and there is this what do we call this? This that mitigated this order block here. This order block that is inside our QM. I don't want to confuse you, so I don't know how I'll explain this in the simplest way possible. Now let us go to the lower time frame and understand what is happening here. Let's do 30 minutes. This is where we are. So this is what I'm saying. Don't be confused. This is what I'm saying. What I'm saying is, what is in our QM level is this. This is what we can see in our QM level. Now I want you to see the precision. The market came, it was creating a series of higher highs and higher lows, but when it came to the QM level before buying. Have you seen that now? It came to the QM level before buying. And if you want to check, now this was mitigated, but our QML was not tapped. I expect that this must be tapped before the market continues to break the previous structure. So what does that tell me? That tells me that this was just but inducement, and it will be taken out. So what do we call this? We call this inducement. So we need to look for a POI below the inducement. Let me go back to 1 hour. We need to look for a POI below the inducement. So what can you see? I can see that there is a very small FVG here, very tiny FVG. I don't know whether you can see it from your end. It is very tiny. This one. We have that very tiny FVG there that has not been mitigated. So, and just below it, we have an order block. Just below it, we have this order block. So that means this market may continue to sell until it gets to this area. But from what I am seeing and from the behavior of the market, it can decide to do what? It can decide to buy from here. So you will have these two areas as your areas of interest. So you call this the interim order block, and you call this the main order block. Now, the reason I consider this order block here is because it has this very big FVG, and this FVG is enough to fuel the market to continue going up. So what do? When the market gets here, you come maybe to 5 minutes or 15 minutes and wait for a change of character. Once you see it, you already know that the market wants to go up. In case you do not see it, you wait for the market at this extreme order block. Now, let us use order flow and understand how we can be part of this sell, because this is like how many pips now? 103 pips. So if you are impatient like me, you will want to be part of this sell, although trading against the trade is not a good thing. Now let us use order flow to come to terms on how we will be able, or how we will be part of this. Now if you look at this, the market broke this structure here, BOS. The market broke that structure. Now let us use order flow and understand, where do we have the money currently? Where do we have the money currently? This was our order block that was mitigated by this order block here. So money left that order block and came to this order block here. That order block was mitigated by this order block here. That order block here. Now this order block was never mitigated. I hope you can see that. I hope you can see that. Now let me show you something else. If you use the line chart, you will see that there was a high here that was taken. If you use the line chart, if you come and use the wicks, this is the high that was taken. These are the things that most people do not see in the market. Okay, so this is how you come and reduce the noise now. Order block mitigation. Okay, let me repeat. Let us start. Let me remove this. Let us start from here. This. Now remember, this was the last swing high. We expected the market, when it comes here, it will continue to create a higher high, but it did not create any higher high. So this became our point of interest, that one. Okay, but now this one was mitigated by this one. Now look at this. I taught you about the psychology of the week. Now, you see there is no order block here. It is just wicks. But you want to be part of this trade. How do you do? Now, wicks are mitigated twice. Wicks are mitigated at the base and at 50%. So, this is what you do. Using a gun box, run this wick from top to bottom. Now, we are in this one, this first one. Okay, if you are together, please show me with a thumbs up. I don't want to speak to lost people. Good. Here, that is here. Who else? If you are here, please let me show. Let me see. We have Beatrice. Who else is following? You cannot only be having 2 people that are following. Okay, TikTok people are also following. I don't understand. My sound is lagging. Is it okay? What is happening? My sound is how is the sound? I don't know. Okay. All right. So my TikTok people, are you able to hear me? Am I audible? Or someone is saying my sound is lagging. Is my sound lagging? My mic is it slow or what is happening? What's going on? But are you able to hear me? Oh, it's waving. So there is like what do we call it? What about now? Especially those who are in a meeting. I think on TikTok, I think we are good. Are you able to hear me now? Thank you. So look at this. So I was saying that the market mitigates the weak twice. The base and the 50%. So this week here mitigated this. So money left from this order block to this week. Okay, this week was mitigated by this week, this green week here. Okay, so money left from this week to this week. So what do? You run this week from top to bottom like that. You run it from top to bottom. Now, someone would ask, how did this sell happen from here? How did it happen from here? Now, if you look at this, it was already mitigated at the base. The base was already mitigated. That tells you that where we have the 50%, there must be another block here. There must be. So how do? You go to the lower time frame and confirm if there is another block. So let's do 30 minutes. Don't be lost. This is where we are looking. At 30 minutes, I cannot see anything. 15 minutes. 15 minutes is still a week. 5 minutes. Now, look at this in 5 minutes. I think everyone can see this. Can you see what is that? That's an order block, and that is even a strong high because it took out this liquidity here. Took out that liquidity. So this is a strong high. This is a strong high. And if you what do we call this now? If you refine this, you will see that it was not mitigated, because I told you that order block, especially in the lower time frame, you refine them to the body. You refine them to the body like that. That's how you refine order blocks in the lower time frame. Don't do that in the higher time frame. But in the lower time frame, you refine them to the body. Now, look at this. The market came and created this inducement. This one. Now, I want you to see that the market came finally and tapped to our order block. And we continued to sell. So what does that tell you? That money has left this order block now because it has already been mitigated. And now money is on this order block here. Let me remove this. Now money is on this order block. All this buy before the significant sell. That is where the money is. And if you look at this, it also took out this liquidity. It took out that liquidity. So that tells you that we have our strong high there. That's our strong high. So, okay, I think I'll go back now to 30 minutes or 1 hour or something. Yeah, let me go back to 1 hour. So you see, market came and tapped from that order block and continued to move down. Now it's the same thing. This order block was mitigated by this. So what does that tell you? That tells you that now this is where we have the money. Okay, that's where you have the money. Now let me ask you, has that order block been mitigated? The answer is no. The answer is no. That order block has not been mitigated yet. So that tells me that if I want to be part, or if I want to continue to be part of this sale, I have to wait for this order. I have to wait for this market here. And I have two confluences. One is that this order block has FVG, and two, we have a swing high here that did not take any liquidity. This swing high becomes our inducement or becomes our liquidity. This is what will push the market to come up here before coming down. So this is where I have to wait for this sell. So we call that a sell order block. We call that a what? A sell order block. So because I don't want to be part of this buy, because now this buy will be a risky buy. That buy will be a risky buy. Now you can come and wait or do your order from here. Where do you target? You target where you have the interim sell or even that swing low. You target that swing low. If you are patient enough, you can wait for it. If you are patient enough. So if you are not patient enough, I'm not sure. But yeah, so for GBP card, I'll be comfortable to wait for this market to come here before I move down. Now remember, because this is how you build buyers. This is how you build buyers in trading. Remember that we are supposed to sell to buy. This is our, let me remove this and this. This is our buy side liquidity. That's our buy side liquidity. So at the back of your mind, remember that we are looking at taking out this high, because the market has already shown us that we are in an uptrend. You can see there's a BOS here. We are in an uptrend. So that is the overall bias. The overall bias is that we are supposed to take out this liquidity. Now there's a possibility, because the market is the market, there's a possibility that it does not come to our order block and it takes you out here. You see where we have this sell? Because now selling in a market like this is trading against the trend. It's only that you cannot waiting for this market from here to here. For example, this was Thursday 25th. Imagine this was Thursday 25th. So all these days the market has only been, so you can wait even for 2 weeks for the market to come here, and there are people who are comfortable with that. But as for me, I'm a day trader. Every day I look for opportunities. So I look for an opportunity where I can see it closest, and this becomes my closest opportunity. So I'll wait for the market to come, tap here, continue to sell. Once the market gets here, I wait for a change of character, I continue to push the market up. Now there's someone who is saying, I want to be part of this buy that is happening. You see this buy? You can be part of it and be profitable. You only use order flow. You only use order flow. You only use order flow. Now this will be another risky buy, but you can still take it. Now I want you to look at this. Okay. Now I think I wouldn't want to be part of this buy, because I want the market to first take out either of this before I continue with, because you see the market has broken structure, but it has not taken any liquidity. You cannot call this liquidity. So okay, with this 30 minutes I can't see anything. 15 minutes, nothing. So there's a possibility, and just look at this market very well. There's a possibility that that will happen. It will first take out this relative equal loss before it continues to rally up. So now, unless the market does that, I can't be part of that buy. I can't be part of that buy. So who has a question? I hope we have understood that. So in case someone has a question, if not, it would be a good thing we meet tomorrow. So what we'll do tomorrow, we will use order flow to trade in 1 minute time frame or 30 seconds, just to understand what is happening. Yes, Kevin, you have a question? Please write it on the chat. Write it on the chat so that we will be able to see it. Write it on the chat so that we can be able to see it. All right, now QML. QML, I think we learned this last time. But okay, let me just make it clear what a QML is. If we are going in an upside like this, but when the market gets here, it's unable, now it creates this is a higher low, but it is unable to create a higher high. So instead it does something like this. It will come here, break this structure, then come and take out this, then continue coming down like that. Now this is what we call a stop hand, or a QML level. Now what is a stop hand? Now remember, most traders are okay. What is happening here now? What the hell? Okay, most traders are price chasers. So when traders saw that this market broke structure here, you see there's a break of market structure here. That's what we call a BOS. Now most traders will come and put their orders here, their sell orders. Okay, because they will say that this is the order block that did what? This is the order block that broke the structure. So they will want to continue selling from here, but the market will come, take them out, and then break another structure here. Now remember, all this time you are not in a trade, you are waiting. So where do you enter this market? You enter this market at this level. This is what we call the QML level. So when the market comes back to retest this level, that is now where you move. Okay, what has happened now? Yeah, when the market comes back to test, that is where you take the market down. Okay, let me show you this in a chart so that you understand. So that you understand. So, okay, I want a market that is very defined. Very like this one. Okay, this one, the market is yet to come here. I want one that has already worked before, so that you'll be able to understand. Now look at this market here. So the market was running up. When it got to this place, it was unable to create a new higher high. Now for you to see QML, you have to use, where was I now? You have to use the line chart. I think this is where we were, if I'm not wrong. Okay, where are we exactly? I think this is where we were, if I'm not wrong. So you have to use the line chart. So you come to the line chart here, and I want you to look at this. Look at what is happening here. So the market came, sold, and broke structure here. Can you see that? So what will happen? A lot of people will want to sell from here, because this is the high that broke this structure, and so they will come and put their short positions here and target wherever. They can target anything. But what will happen? The market will come, take them out. Okay? Take them out before continuing down. But now for us, we will have to wait for the market to come to our QML. Now QML, that is why it is called QM level. It is a zone. It is not a specific place, it's a zone. Now you see from where we have this swing high to this swing low, this is our QML. Where we have this swing high to this swing low. Why is it our QML? Because this is where we have the stop hand. I've told you that it is called the stop hand because its main work is to trap early sellers, the early sellers or the price chasers. So that is why it is called the stop hunt. It is hunting for stop losses. And this is where we had what? This is where we had our BOS. That's where we had our BOS. Now, okay, this is also important to understand that the first trade will come from the BOS. The second trade or the ultimate trade will come from the stop hunt. Now let's go back to where we have the candles now. The candles now. Now look at this, Look at this. Look at what is happening here. Now, if you can see, what do we have at the QML? I think it's even better for me to do, okay, so that we do not lose this. That is the level we are looking at. Let me go to the lower time frame. So that we don't get lost. This is where we are. This is where we are. So look at this, This is where we have our stop hunt. That is where we have our stop hunt. That is where we had our BOS. Now it's only that you cannot see this because this was a gap. The first trade came from the BOS. This gap you are seeing here. And this trade almost always breaks structure, if you can see that. This is to induce sellers to be in this trade. But the main trade comes from where we have the stop hunt. And where we have the stop hunt, if you look at this, if you look at where we have the stop hunt, it is also where we have the FVG. So what do? You refine this to the FVG. You refine that to the FVG. Now, every time you do not see a valid order block, use the FVG instead. Every time. But as for me, I don't use FVGs. I don't. But in case you are bold enough, every time you cannot see a valid order block, you use the FVG. Can you see how it worked? Now, let me show you. If you use the line chart here, and this is where we have our QML. This is where we have our QML. Can you see that? Look at that. It is exactly the place where the market came and continued to sell. So that is what we call the QML. But I had done a lesson on QML. I think go on my YouTube channel, you see it. One of the lessons I did was the QML lesson. The QML lesson. And I think with that